Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, September 3rd, 2015. In this video, we'll take a look at the charts, mainly focusing on the SPY, the S&P 500 tracking ETF, and the QQQ, the Nasdaq 100 tracking ETF. We'll start out with the longer-term charts. I've spent quite a bit covering these lately, so we'll only touch on these and just review, and then spend a little bit more time looking at the shorter-term charts at the end of the video. Because it does look like the markets are setting up for a potentially sharp move, the next big thrust either on the upside or downside here. So again, we'll look at that on the short-term charts. Starting out here, this is a weekly chart of the SPY, 10-year weekly chart. And as discussed, we've had this breakdown from the long-term bull market uptrend in both the SPY and the QQQ. These are some potential targets here. The first target, if we do make another thrust lower, would be the recent lows that we had on that big drop on the 24th, and that would be roughly, these lines are roughly drawn here, about 181.40. See some support here around the 172, 173 level. And then ultimately, if we have embarked on a new cyclical bear market here, we're probably looking at a move down to the 155, 156 area on the SPY. Still some work to be done on the technicals, but that's where it looks like we could be going in the coming months. QQQ, here's a weekly chart of the Qs. Same story. On this chart, the salient levels or trend lines are marked in color here. So we have this purple, or I guess they call that magenta trend line. That was the primary bull market uptrend line off the 2009 lows. We had this yellow sub-up trend line, which I've been watching as well. So what's going on right now from the longer term perspective, there's a battle between the bulls and the bears to regain that trend line. That one goes all the way back to the 2011 lows, and we had numerous reactions. So I think it's a pretty valid trend line. And that was the one that was smashed below on the 24th. Prices managed to go up there, and currently we're trading just above it, but only by a hair. So in the near term, the bulls have regained that, and we're looking at a weekly chart. So all that really matters here is a weekly close. So we'll see what happens at the end of the day today. And of course, if we get up through there, this is the primary bull market uptrend line. So lots of scenarios here, but it's possible to see for the next few weeks maybe a move back up in the markets to back test those primary bull market uptrend lines from both the SPY and the QQQ. That would bring prices up for the next at least few weeks probably to get there, and then maybe move lower. And of course, if those levels are regained, as well as all the overhead supply that we have here, resistance levels, that would certainly be a bullish event and probably send us to new highs. All right, let's take a look at the daily charts. This is the QQQ, and as mentioned, these are some key levels here, each of the horizontal lines. So we have, as I've been mentioning a lot lately, the Qs are really up against at least triple resistance. We have the 200-day moving average, which is the red line here. That's an important level watched by a lot of traders. We have this is the yellow uptrend line off the 2011 lows that I just covered. That's just overhead, as well as this support shelf here, or resistance shelf, I should say, which is pretty much defined by that trading range that we've been in throughout most of the year here, shaded. So there's I should capture it right there, right above that level. So you can see, let's erase that and go back here. And this does a better job of capturing that level. So that's the resistance that we're up against in the Qs. And let's flip over to the SPY real quick and take a look before I leave this chart. This is something to watch as well. If we do go up and make that back test to, let's say, this trend line, the yellow trend line here, we have a trend line that started to form off the highs back here, this orange level here. So again, just draw that out. One possible scenario would be quite frustrating for the bears. Would be a back test over the next few weeks up to that level, and that would be a back test of this downtrend line, the orange downtrend line and that yellow uptrend line, followed by then a reversal down probably heading to retest those lows, or not the lows, as I mentioned. The QQQs is a very distorted chart because the NDX didn't drop by that much. So my next downside target would probably be just above the $94 area here if we do reverse and start making another one more thrust lower. Okay, this is the SPY daily chart, and this is that 190, call it 198-ish resistance area. What happened here if we zoom in, that level was defined by these reaction lows back here in late 2014, early 2015. And in the sharp snapback, I often talk about momentum overshoots of support or resistance, and that's exactly what happened here. Following that big drop on the 24th, we shot up, a huge run up, just as sharp as we fell, and overshot that by just a couple days, fell back below it, hit the support level. As I said, the charts have been working very well, but in the fast-moving markets, you tend to overshoot these support and resistance areas briefly. That's not uncommon. So right now, after tagging support, after the initial run-up from the drop on the 24th, we're now challenging that overhead resistance again. And to draw it out here, let's see, here's that the lows there. So there's one support shelf, and if this gets taken out, then we look at the trading range that we've been in throughout most of the year, and this is just as I mentioned before, very solid resistance level around the 204 area. So that also jives with a little more, the potential to see a little more upside when we may or may not get it. So to move up to that 204 level, you also can note the 200-day moving average just coming in and turning down at that point. So that would be possible to see a move up there and then another thrust down. Okay, moving down to a 60-minute time frame on the SPY. This becomes a little more clear. You can see these gaps, so gaps are great levels to trade around. And really what we're looking at, here's the $200 level. You can see quite a few reaction highs that occurred from the initial bounce after the fall on the 24th. So that's a pretty well-defined area. And if that does get taken out, which would obviously be a bullish technical event, it's pretty thin between this point up to that 204 area. There is a gap down here, a little lower, around 283. So we'll say from about 203 to 204. That's where that really solid resistance starts coming in. So again, on the to see a near-term bullish case with a little more upside, go up here. This would be just a tremendous offer tremendous risk reward opportunity to put some shorts on at this level if we get there, with stops not far above. And on the longer term bullish case, if the market does just manage to power right on through that resistance level, all this overhead supply as if it weren't even there, then that would show that we have just a lot more room to run in this market, with a lot of potential buyers stepping in. Again, my expectation is to see a reversal there, but if you're building up a short position for the next leg down, and you set stops not too far, somewhat above this level, your downside is minimal, while your profit potential or downside move on the market is many times what your loss would be. And we can also note this uptrend line that seems to be forming, and we'll look at this on the shorter term charts here in a minute. This is a QQQ 60-minute chart, and as I mentioned recently, this chart's distorted because of the mini flash crash, the disconnect that we had in the Qs compared to the index that it attempts to track, which is the NDX. So we'll look at the NDX, and we get a little bit clearer picture because we don't have that huge candlestick which compresses the prices up top here. So this is the NDX. You can see a couple gaps. I don't have all the lines drawn here, but there's some gaps, dual gaps there. That's around the 42.34 area. So if we pull back down, that might act as support. And although it's not drawn here, we can add that trend line. So this is one trend line that I'm watching. And if we see those uptrend lines like I just discussed on the SPY, as well as the QQQ or NDX, if we break that will most likely trigger the next wave of selling, I'm sure. And we may need a couple additional tags here on this trend line. Right now we only have a few reactions. The more that we have, the more reactions we have on a trend line, the more valid it is. So I usually look for at least three any 2 points can be connected at random, but it takes that third reaction or bounce off a trend line to help validate it. And as with the S&P 500, there's just a ton of overhead supply here. So the Nasdaq, more so than the S&P 500, has its work cut out for it if it's takes out this level here, the 4340 level. May push up. There's a gap to fill. The top of that gap comes in around 43.87, and so there's quite a bit of resistance overhead, and just beyond that, that trading range which we slogged around in throughout most of the year. So, okay, so for longer-term investors, long-term swing traders, trend traders, the charts that I just mentioned are probably all you really need to know. But although it may give you a little more insight on micromanaging or timing some entries and exits on your positions if you're scaling in short, or if you're long buying the dip, you're looking for a move back to new highs, believing this was a great buying opportunity, and that may prove to be the case. These are the lines that I'm watching on the 5-minute chart. We're forming a pretty well-defined downtrend line. As you can see, 1, 2, 3, now 4 reactions. We had a failed attempt to get up through that downtrend line today on the QQQ. And once again, this is a 5-minute time frame going back. You can see the daybreak lines here, so just about a week or so trading history. So essentially what we have here is a triangle, almost a symmetrical triangle, not exactly symmetrical, but close to it, defined by this uptrend line here that I'm watching. So a break of this uptrend line, and as I said a minute ago on the SPY, would help to have another tag or two. With that being said, just keep an eye on that. If we break that, this is our next support level here, about 103.24, and then all these additional lines. And as I said, there's still the possibility, if at any point now, if this market breaks, to see a move down that will test that critical support level that I've been highlighting recently. Comes in, just under the $98 level on the QQQ. So with that being said, any upside break, especially a sustained break, meaning we get let's say a 60-minute candlestick print close above this trend line, that would be bullish, while a downside break would be bearish. Although both on the upside and downside, there's several support and resistance levels to contend with. So if you're day trading, this market has responded very well to the technicals lately. These are levels that you can target. Of course, it's nice to have the confirmation via the MACD and the RSI and whatever other indicators that you use. This is really signaled, as you can see on this chart, the big moves. Once this negative divergence on this rising wedge broke, or the rising wedge broke, I should say, that played out for a very nice move down. And as I pointed out the other day, we had this bear flag break in the last video that I did. That bear flag broke down, led to a nice move down. As discussed, we had positive divergence that formed, or at least at the time that I anticipated would form, which it did, and that led to the reversal that we've had here off that low. So again, now we're trapped, and the next big move will probably, or when I say big move, relatively speaking to this 5-minute time frame, that will come on an upside or downside break of these trend lines. We'll take a look at the SPY as well. And as you can see, a very similar, almost identical pattern on the SPY, and the uptrend line is pretty well defined on the SPY. There was a fake out today, a fake out meaning a false breakout. So this is potentially bearish. When you see a upside break, you tend to have longs pile in on that, shorts cover, and what happened is that breakout so far today has failed as we've come back into that triangle pattern. So as failed breakouts, either bullish or bearish, usually result in a quick move in the opposite direction. I'll be on the lookout for move down to this level, and especially a break below this trend line, which on the SPY would probably bring us back down to any of these support levels that I have listed below, including the critical support at 187. By critical support, I mean once and if that breaks, and by a fair margin, then we're probably going a lot lower, and most likely we'll visit the lows that we saw on the 24th. In a nutshell, that's what I'm watching. What I'll do now, for those of you interested, especially for more active traders, as well as to confirm what I'm seeing on the SPY and the QQQ, as I often do. I like to go through the top components. With the QQQ, the top 10 holdings make up more than half of the entire Nasdaq 100. And so we'll look at just a few of the top components and see where they're going, and that might give us some insight to where these patterns will break. All right, Apple, as we all know, is by far the largest component of the QQQ. It's also the top component in the S&P 500 as well. So this is a big one a lot of people watch. And Apple has already broken down and back tested the similar symmetrical triangle pattern that it has formed on this 5-minute chart. And that pattern, of course, is just over the last few days. So so far, you can see the breakdown back test as I'm doing this video live here. It's about 12:40 Eastern Time. And if this continues to play out, then as you can see so far, we'll probably see a move in Apple down to any of these support levels shown on this chart. So potential breakdown in Apple, something to monitor. Next one is Google. Again, a lot of these charts, especially on the tech stocks in the Nasdaq, will look the same. So Google, you do have, as I'm recording this video, we just broke down below that uptrend line, and that may trigger a move down to this next support level here around the $600 area. And as I said with the indexes, these are the uptrend lines. So if we do reverse, maybe these prove to be whipsaw signals and we break out. Let's say, for example, we break out on the SPY. I'll look and make sure that a lot of the individual top components, as well as the QQQ, look at the top components there, make sure that they're confirming they're also taking out those downtrend lines, because once most or all of the top components have taken out the overhead resistance, it's more likely any breakout in the index itself will stick. And that's why really study these top components here. Microsoft had just a wall of resistance here on this. Again, just going back for the last week or so, and has failed on numerous attempts to get through that. You can see a well-defined resistance line here at about $44. And so far turning back down, but it still has this uptrend line support, so that has not broken as of yet. And as you can see, there's numerous support levels, horizontal support levels on Microsoft here. Facebook, I had parallel uptrend lines because I could go with either one, and it has broken down and back tested both of those and appears to be moving lower. So this is another top component of the Nasdaq 100 that has broken down those short-term uptrend lines and looks to be headed lower today. Amazon, I have this shaded box here. It just shows a lot of this trading range up above, which is a resistance zone. It tried several times to get up into that resistance zone, take it out. So far has failed to do so. However, it has yet to take down its comparable uptrend line. So something to keep an eye on there. Gilead, as I've been stating for weeks now, if not months, biotechs I think have the most room to fall. They already have entered, or technically already are in a bear market. They're well off 20% off their highs. The biotech sector, the ETFs, and many of the top components. And I think there's more downside to go in those. This looks to be a sort of an ascending broadening wedge pattern, and we've broken down below that. And if you can, as you can note here, Gilead, along with a lot of the biotechs, you can see the retracements haven't been anything close to what a lot of the big name tech stocks, Facebook, Google, Microsoft, Apple, those were pushing up quite a bit, where a lot of the biotechs have really in the last few days especially lagged. So that's a sector that might be headed lower. And let's see what's next. We'll look at a few of the components of the SPY, the S&P 500, a couple financials, because I think that's another sector with some pretty good potential on the downside, the financial sector. Here's Berkshire. This is still an active short trade on the site. Already hit a couple of targets. It's more of what I call long-term swing short. We base this off the weekly charts. We entered this one, a couple months ago at least. And so far, this one does have a nice symmetrical triangle pattern, and it's right about in the middle there. Big gap here. So far, Berkshire failed to backfill that gap today and is turning lower. So again, it's really hard to say which way this one's going to go until that pattern breaks out. But if the S&P 500 and the majority of the stocks, as well as the QQQ, if those indices break to the downside and a lot of the top components do, well, then you could be almost assured it will pull Berkshire and any other stocks that are still within these patterns down with them. So it's just a way to give a heads up if the majority of the stocks in a sector or that index break down. We know that Berkshire will get sold in sympathy with the broad market. Here's Exxon Mobil, the heavyweight of the energy sector, another similar triangle pattern. So again, these can break either way, and that's what I'm watching for. So I think I'll wrap the video up here. I could go through these one after another, and we'll see the same thing. We'll see these uptrend lines in the near term that I'm watching, the downtrend lines, these symmetrical or almost symmetrical triangle patterns. And as I said, there's a potential that whichever way these break is likely to trigger the next decent move. When I say decent move, tradable move. You know, if ExxonMobil breaks this, we're right now at about $74. You know, I could see that if it breaks below the triangle, it's probably heading down to around the $68 area, and that's about an 8% drop, and that's comparable to what we're likely to see in the broad markets as well as a lot of those other key stocks that I just mentioned. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.